Hi there. This is Vinny Chopra. I hope you guys can see me. I don't know. Attendees are there. How many of you can see me? Please do raise your hand or put your name in the chat. Oh, yeah. Thank you. Thank you. There we go. Lots of you are raising your hand. Please say where you are from, if you don't mind. Hard drive doesn't have enough something. Doesn't matter. Anyway, could you all say, if you don't mind, please let me know also, how do you know me? Vinny Chopra, did you look at the social media or have you read my books that I have, written also on Apartment Syndication Made Easy? I would love to get your comments and thank you so much. And Asma is here, my associate. She'll be able to also reply back to many of you. Also, please tell me if you already own apartment complexes. This is a multifamily webinar. So I would love to find out what's the level of my audience today. I think we had almost 277 people or something, right, Asma? How many had registered? So hopefully we'll have a good representation as we start the project. I do also want to let you know with my Spanish speaking friends, we are able to convert the whole book on apartment syndication into Spanish also. So if you like to read in Spanish, I'm looking for an orator. And if you'd like to let me know also, if you're a good speaker, you would like to read my book, I would love to feature you also then, and I'm looking for a orator for reading the book because this book is read already. It's on Amazon and everything, but this is not read yet. But and then again, please let me know also, what you are looking for in this webinar. We'll get started right away because I want to cater to your needs and also, well, so that your time with me is very worthwhile. Whole 1 hour, maybe even longer, we could go. And positivity has been my life. So I just wanted to mention that also. Let's see, we have lots of hands up, but let me go ahead and start the show and then we'll answer lots and lots of questions. Please put your hands down if you don't mind and do chat with me and Asma on this side. I'm so glad you're letting me know that you're fixing and flipping and you're into wholesaling. I think engineering background. Thank you. Developing. Fabulous. Found you on the Eventbrite. Thank you so much. Again, this is Vinny Chopra. I'm going to start sharing the screen so that you could see my whole presentation. And we'll start it right from here. As we get going, I want to let you know who I am a little bit. Glad you could make the time today. Hope you're very excited about the Multifamily Wealth Masterclass. By the way, I also mastering the multifamily investing, building wealth in the new economy. See, 2025 is going to be a different thing. In multifamily, last 3-4 years have been very challenging to say the least. So we'll talk about all that. I'd like to comprehensively guide you through the whole process in this thing. Again, I'm Vinny Small Chopra. I smile a lot. So please don't mind me. And I'm thrilled to be that you are here. You can scan this also, by the way, if you have a phone. I hope you're looking on the laptop so that you could really have phone handy because you'll be scanning some things. You could reach me, you can text me, you could say my information. And this way, my team and I can help you to move next level and next level like that. Again, who is Vinny Chopra? Many of you would like to know. I'm a mechanical engineer from India, entered USA with $7 in my pocket, did my MBA marketing from George Washington, sold educational books and Bible books 13 hours a day, actually 80 hours a week, way back when, and a husband for over 40 years, 44 years, and Neil and Monica are our two children. That's why our company's name is Monil, Moneil. And I'm a broker also. Bought first family home 40 years back duplex, many single family homes, started many companies. I'm principal syndication and all that. Went to almost over $1 billion in sale from a portfolio from $7 to billion and all these things. General partner in all these places right there. My inspiration is my family. We love to take a lot of vacations. Next month we are leaving. Then we come back for a month or so. Then we leave again, on vacations. By the way, please scan this right now, if you would. My 3 books are on Amazon, and I would like to gift you also free all these 3 digital copies and audible copies if you stay with me till the end of the presentation. So please access these books. Again, disclaimer, this webinar is for entertainment and educational purposes only, should not be considered legal, accounting, or investment advice at all. And it does not represent an offer to sell you anything, or solicitation of a PPM or private placement security or anything, nothing like that is believed to be accurate. Please consult your own attorney, financial advisor, and CPA for legal matters. These consult with attorney, and no distractions. And it will last about 1 hour, our whole seminar. And I hope I can really add so much value to each one of you. Why multifamily, market overview, investment models, financial aspects, challenges, risk mitigation, getting started, and then we'll have free gifts and then also Q&A.
Vinney ji, you are on mute. We can't hear you.
Sorry, I don't know why my microphone went to unmute. So can you hear me, or were you able to hear me before?
We can hear you now, but we
Oh,
missed
how
what
about
you said before.
before?
Yeah. We missed
Oh,
some of it. Yeah.
you didn't hear before what I did,
No, no,
or
no.
no?
No, we didn't.
Oh my gosh, I should have I should have known that. Oh my gosh, I just went through the whole thing.
You've gone through the disclaimer. You were only telling about your
Okay, okay.
books that are
Sorry
available.
about
Yeah.
that, guys. So you were able to hear up to here, I hope. And then
Yes.
agenda. Okay. Then I was just saying that please follow me. I do weekly abundance mindset show, 9 a.m. Pacific. Then I do Saturday 9 a.m. also. And then, of course, my books are on audio and all that stuff. But this is giving you one really good dose of multifamily everyday apartment syndication made easy. So please scan this. That's what I meant right there. So let's just go here. See, what has happened is multifamily is the best class which I wanted to teach you, because it is. I used to be in single family home. Many of you who might be in single family or fix and flip and all that, please get into multifamily, because that's where the big potential to scale up is. It's duplex, fourplex, tenplex, whatever you can afford to buy, or with the help of people, family, friends. That's what I also teach, because that's raising money, because that's what life is about. If we can help enough people get what they want, you will get what you want. Zig Ziglar talks about that. We are a renters nation at heart, because lots of our people cannot afford to live in the homes. Number one, millennials also. Now, stable returns. Right now, it's very hard to find multifamily with stable returns, and cash flow is the king. That's how I've lived my life for 20 years, is to look at, underwrite the property, look at the finances, the revenues and expenses, and then figure out if there is a cash flow at the end of the day. If there is no cash flow, do not buy. Do not buy. I say that. Economic factors driving the multifamily interest rates. As you know, prime rate in in USA is 7.5%. So the interest rates are so high right now, you should be preparing to understand when to get in, what markets to get in, what cities and states are very favorable. That's what I want to teach you today. All right. The key thing is tight housing supply is there because after COVID, a lot of permits went way down and lots of different products takes 2-3 years for multifamily to build. It's not like a home that's built quickly. Population is shifting also from millennials to, and baby boomers to seniors and so forth. But the millennials, which are about 61, I think I have a slide here, 67 million people, see, they saw their mom and dad lose their homes, possibly in the crash and so forth, economic downturns. Secondly, the millennials like portability. Portability. Please remember that. Portability is where they want to live wherever they can, where it's cheaper, or rent it. They don't want to mow the lawn. I mean, it's amazing how you read the demographics and what their likes and dislikes are. It's mind blowing that the millennials will be renting a lot more. I call it millennial tsunami. Millennial tsunami. So the rents will be, rental market will be strong. Immigration tsunami is another one, which I talk about a lot. And the third tsunami I talk about is the silver tsunami, which is the senior living housing market, rental market is be flourishing like crazy. So please remember one word, multifamily I'm teaching you right now, but also senior living multifamily, duplex, fourplex, tenplex, whatever, will be also very, very much in fashion as you go on. As you know, home ownership rate is so low right there, or the peak was 69, now it's just 37%. And the student debt is a lot, 1.6 trillion. I know we try to write it off and all that, but that also helps in the fact that the millennials will be renting for a long time. And again, urbanization and population growth has been increasing. And that's the key because people, lots of companies are not asking people to come to work, but 2 days or something. Many of them can work from anywhere in the, country and nicer places. So urban areas, people are liking monitoring local vacancies. That's all about population growth, job creation, job. I would like to actually take you right now. Let's just see if I can go out. I had opened up some very exciting things for you. Let's take a look at. Please remember this report. And if you text us, please put it in the chat if you'd like to get this copy of the report. We can put it in the Google Drive and send you the link also. So please say in the chat if you'd like this viewpoint report, which is a beautiful 50-page report or something, 53-page report. And it talks about multifamily a lot. And look at this here, all the trends, employment, the change in the headlines, and what is over here, the deflation. Some of you might be very much needing to research and things like that, interest rates, where they are going in 2025. This report just came out. So that will be a good one. If anybody would like to get that one, please let us know in the chat and we'll be able to. Now we're going to go to these market cycles, which I brought it over here just to show you. Okay, everybody, please listen to me and watch along with me right there. That's what I meant. Right there at the bottom, see, there is a recession. Recession is at the bottom. What is recession? Recession is increasing vacancy. When in a particular submarket, there is increase in vacancy, there is moderate or low new construction, not too much construction, low absorption of the product that comes on the market, and low negative employment growth. Aha. Low and negative employment growth, where the jobs are not increasing but decreasing. That's where the recession is. And look over here what we see. San Antonio, San Jose. I live near San Francisco, right 45 minutes away from me. San Jose is going through recession because lots of companies are leaving San Jose and the job market is low over there. So that's where Cleveland, Ohio, my brother Walter is in Cleveland. He's buying multifamily in Cleveland, and Roland Park, Palm Beach, Florida. Look at that. Again, please look into these, all the cities, see where you are, and then you have to go deeper into it, into the MSAs and quadrants and so forth. Like I teach all that in my mastermind coaching and everything. And my online academy also teaches so much. This is just like a refresher course that you can come. But if you are interested, we would love to offer you, to just for a very small fee, you will be able to, investment, I say, learn much more from me in my mini courses and my maxi course, which I have 172 lectures and all that. Anyway, but let's talk about here. This is recession. Look where it is darker recession than lighter. That's where Birmingham, Alabama, Los Angeles, Oakland. Oakland is very close to me. Phoenix, I was there last week. Phoenix is coming out from the recession into recovery and then expansion and then hyper supply. That's how the cycles work in every area, every state, every city, like that. All different are in different places. So this is over here, Kansas City. Look at that, recovery. So very good place to really invest are in these areas right there: Sacramento, Portland, Kansas City, Las Vegas, Orange County, St. Louis. Chicago area, recovery, right in the middle over here, Denver, Colorado. Again, this is recession, this is recovery, decreasing vacancy rates, low new construction, then comes expansion right over here in the Greensboro area. Now we are in the first part of expansion. It's going to get into this place again. This was very sweet that it went down. Now it's coming back. So all these cycles happen. And you have to be really cognizant where you are buying, what product you are buying, is it cash flowing, who is going to finance that multifamily. We'll talk about that, seller financing. One of my students, actually Pramod, he might be here. He bought seller financing 80 unit apartment building near Chicago. And he's doing the renovation. He's a fixer and flipper. He owns, what's that? Airbnbs also very nicely. But then he came in my academy and really got it going. And, so proud of him. So 80 units, he put it zero money down. And the seller carries, and he bought it at like last year, I think. And it'll for 2 million or something like that. It'll be worth 4 million in just 2 years because he's doing the value add. So there are creative ways to buy. You cannot get a loan for, the loans are so high priced right now. So that's what I also will talk about. Let's look over here. So this is here. You can see Chicago, where he's at. I was just talking about it. Denver, Houston is kind of in the recovery mode in the middle. Then Baltimore, Boston, Indianapolis right there, Oklahoma City, all these, Columbus, Ohio. I heard from, one of my students over there. Then he's buying in Columbus and Cincinnati. Look at this, Austin. Austin is kind of coming from the expansion, little bit going into hyper supply now, right over here. This is 2025 annual report market cycle chart. So this is what they are predicting right now and where it's going to go. So Austin is right there. I own a property there in Austin. With the grace of God, we bought it for, oh my gosh, 34,750,000. I buy bigger products now, and it's worth about 50 some million, 56 million, I think, or something. So I bought it in COVID, by the way. I bought this Austin one in COVID 2020. It's 5 years back. Wow. Time just flies. I can't believe it, and it's worth almost 15, 20 million more. Anyway, Minneapolis, New Jersey, then Charlotte, Charleston, over here in the hyper supply early. So you want to be very careful when you buy here, because as you know, the cycle goes, it's going to come into recession. So I'll kind of stay away from here in my thinking. So this is the multifamily one, and we'll just send you all of them. This is office market, which is again very, very difficult and different. As you know, we are going through recession. San Francisco, very close to me, Oakland, all the places. Office is not that good place at all. And then this also shows us retail sector also. There are cycles. And then the first one I didn't show you was industrial. If some of you are into industrial, so we can, provide you that. Let's look at this one. So CBRE is also something over the last 20 years. I've really looked at these reports a lot as I have bought so many different apartment buildings and so forth. Almost 40 transactions I've done, over 1 billion plus, and so on. So right over here, uh, if we could, yeah, everybody who's able to, please let us know who joined later on, who you are, where you are from, and your full name. I would really appreciate that. Asma will be able to keep track, how many people. I think we are 72 of us here at this point. So thank you, Asma. I appreciate that. And let's go over here to multifamily. Over here, cyclical recovery just ahead. This is CBRE, which is a very, very good company, and they also, do a lot of great reports and a lot of studies, research. So for all the short-term negative effects brought on by the rising interest rate, the record levels of new supply coming, strong renter demand will drive improving occupancy and accelerating rent growth. This is turn will lead to increased multifamily investment activity. To be very truthful, I've not bought much in the last 3, 4 years. I've been selling. I've been selling at the peak last 5 years. But now with the interest rates, hopefully with the new administration and the rate cuts, hopefully in 2025, we will be able to get that cash flow, net cash flow, we call it, to at the end of the day, to really make sense so that we could invest more into multifamily, but be ready with the money, with qualifying of the loan, and yourself doing underwriting, talking to brokers and things like that, which I go in a lot more detail in my 172 lectures. That is, in my academy, by the way. If some of you are really sincere about learning this process, it's a very small investment, and I would really, really appreciate if you would love to join that, towards the end of the presentation. So let's look over here. Developers will add more. This is a very, very good chart I'm going to show you right now. Developers will add more multifamily units to US market than in any period since 1970s. Most of this new supply will be in the Sun Belt and mountain regions, where some of the market will grow their inventories by nearly 20%. Why do I say that? This is important because when you are buying a multifamily, you got to make sure you're buying it correctly. You don't want lots of new product coming into the sub-market, and then you're competing with the new product, and they lower the price, and not too much differential in your old multifamily or apartment and the new one. People will be gravitating to the new one. So that's what we're going to talk about right there. Recovery timeline for high supply market with negative rent growth. So let's take a look at right over here. Okay, right over here. So if everybody looks with me at the bottom, look at the legend. The green is increasing vacancy, negative rent growth. Aha. What does negative rent growth means? You cannot increase rent. Negative rent growth means regression of rents. People have to give concessions. They have to give free rent for a month so that people can come into the apartment. Be careful what you are buying or where you are buying. So increasing vacancy, there is more vacancy So it's not 90% occupied, it's 85% occupied or 75% occupied. Be careful to see what that is. That's the green one. So all this green shows in Austin, in Tampa, Raleigh, Atlanta. These are major markets, as you could see right there across the USA, right there. And this is increasing vacancy, negative rent growth. That's the green. Let's go to the black. The black color is declining vacancy. Okay, increasing vacancy, then declining vacancy. So we saw from Q3 23 to Q4, then Q1 24. So we just are right there, guys. We are right about here in the timeline. Are you with me? Everybody, we are right here in the middle, like January, right? So this is the end of quarter 4, and this will be Q1 finishing up, which is Q1 will be March 30th. That will be this point here. We are January 22nd, whatever it is today. So we are right about here. So then it shows us that majority of the big peak annual deliveries of the new apartments already came in these places. Salt Lake City, it came back here. Next one is not coming due at all. In Nashville, it just came there towards the end of Q3. And now there is some more coming up over here in these markets. So we have to be watchful for these little triangles, green triangles, I call it. Stable occupancy. Okay, that's where you want to be. Stable occupancy, positive rent growth. That's what is going to happen. But see, they are not expecting it to be. uh, I mean, until like Q3 2025. So this chart is very, very, very good for you to understand and see and so forth like that. So, we'll be able to put some of these things into Google Drive. If anybody wants this, or the PowerPoint presentation, we'll love to provide that to you also. Or the recording of this, recording of this also. Please let us know. Say that in the chat so that we will be able to cater to your needs. And if anybody would like to join Academy, please let us know too, if you are really sincere to take this whole thing to the next level. Because this small webinar, 1 hour webinar, will just touch the waters. But if you are really sincere, you want to learn the business, then please join my academy if you can. And it's a very small investment, which you will see it in a second. Okay, let's go here to the declining vacancy, positive rent growth. Love that. Love that. Declining vacancy means when the vacancy is going down, occupancy is going to 90, 92, 94, 95. That's where it is. And positive rent growth. So these are our best friends. This color right there, like a mauve color right there, and this color. So we need to be looking at in these metro areas where we are right there. Okay, I hope this will help you. Then again, average monthly multifamily rent versus new home mortgage payment forecast. It's good to see if people can afford to buy or they will rent. So a lot of these things come into play when you are really looking at purchasing a multifamily. I wanted to kind of share that cost to buy. Premium will continue to favor rental market right there. Just a very good study. I really like this study, from our multifamily right there. Let's go to another one. Wow. Freddie Mac. As you know, Fannie and Freddie, government arms, they give also money out to buy the things. Freddie Mac has been very good to me. I have bought things at 3.86%, 3.79%, 4.2% interest rate, fixed for 10 years. So I've been buying this, very good places. And we sold quite a few assets last year, also 2024, 2023. So all that. But the thing is, this outlook, if we go back here to January, it just came out, this report also, we'll be able to put all this in Google Drive so that you could access them. So please let us know if you'd like to get them. All right. We'll only send them to those people. The multifamily market is holding steady nationally. And I don't know if you could read it. I could do a little bit higher, a lot more here. See, like here, daily 10-year treasury rates. It's a very beautiful report. I like it very much. It also tells you the trends and where we are, Fed rates and weekly jobless claims and annual, I mean, it's very self-explanatory, but you could really enjoy watching, seeing what the trends have been for the last 5 years, where we are going year to year, and so forth like that. So let's just say, again, if I go into a lot of these details, it'll be quite a bit time, each and every one. Let's go to another one. So I also did something for you all to see what are the best cities to buy in multifamily property in 2020. So I found this little article right there in December, about a month back or so. Top 10 cities for multifamily. Again, I'm not promoting these. I'm just sharing with you some knowledge that I saw, and you could see it too, out there on the data. See, Data USA, IO is a great place. It says right there, keep reading, learn more about the urban areas for multifamily. Remember, people are moving to urban areas, including information in each city's market outlook and investment opportunities. All demographic information comes from censusreporter.org. If you have a pen or pencil, please write it down, censusreporter.org. I use them all the time over here. DataUSA.io is amazing place. Data dash something also, info data something is, I use that too. While median rent, occupancy rates, and rent growth statistics come from the Zumper.com for 2-year, 2-bedroom units and so on like that. And Crexy, by the way, Crexy is a great, like LoopNet, like oh my gosh, which one is that? CoStar bought LoopNet, as you know, and Crexy is again a great one. Lots of great websites are there where you could see multifamily, and talk to the brokers and things like that. What to say to the broker, how to establish relationships, how to also establish relationship with your investors. I teach all that in my academy. So a lot of you, if you join my academy, you will really learn so much. We provide you 40 different documents and templates and everything in there, which you can overnight take my name out and my logo companies out and put your name and logo on it. And you are ready to use all the documents and templates and PowerPoints and, Excel worksheets, underwriting sheets right away. So I'm just saying that little, selling you on that. Chicago area, look at that. We saw that Chicago too. Remember in the recovery. So this is a great report, where you might be able to look at all these things. Correctly Intelligence, Chicago multifamily trends, they give you here. So lots of great things. San Diego showed up on the top. Look at that here. Columbus, Ohio, we just talked about it. We just saw that. It just re-permeates the same thing. Nashville, Tennessee. I love Nashville. Knoxville is the one where we bought this multifamily, 107 units, 2021, I think we bought. We just sold it last year. 12 million five we bought. We sold it for 17 million four. What? I mean, we knew our business plan, the rents were so low, the renovated apartments were done, but the seller did not know how to manage. That's where we look for. We look for the deals where, and I teach that, how to find those sellers, out of state sellers, which that was in Knoxville. I think the seller lived in Nashville and then also had renovated the whole property in 1.5 year. It took. I bought it at 12.5, and I think 3 million something was put into it, or 4 million was put into it. I thought, wow, I bought it for only 8 million. And because 4 million was put into it to renovate and everything, and additional apartments were built and all that stuff, and swing pool and all that, I remember I said, oh my gosh, my cost is only 8 million something. So I bought it quickly because it was 8 million base plus that 4 million renovation budget, which was done already. No dust, no time wasted. And we bought it for 12.5. We changed the demographics, which I teach also in my course, how to do it so that our occupancy was 99.7. Most of the time never went below 94. And we changed whole demographic. We started the RUB system, bill back system, where the residents were not paying for cable or for electricity, they were paying, but water, trash, gas, and for termite, So we were able to change all that and reconfigured the loan also to a fixed loan. That's when the value went to 17.4, and my good buyers bought it, and my investors made a lot of money in that one. Anyway, I just thought about it because Nashville came to my mind. Knoxville is not too far. Raleigh, Durham, remember, right there. Boston, look at this here. Dallas, wow, right there. San Jose, right there. Remember, it's in the recovery mode right there. We looked at it just a while back. Philadelphia, right there. Cleveland, Ohio, nearby. I don't know if Cleveland is there. Minneapolis is showing up there. All that. Anyway, but let's go to another one. I went to this one. It's the CRE Daily. I mean, all these are great places to really get a lot of information, guys. As you are getting into multifamily, if you're tiptoeing, it won't do any good, but you want to go all the way out and meet me every no, next month we are on vacation. So March I'll come back again and teach every month. Then we come back and then we go again on vacation with the family like that. But it's okay. But you will see me all over the place and social medias and all, right? The multifamily trend, supply, affordability, retention. So we'll be able to take these and download them, put them into Google Drive. If you'd like to see these reports, please chat, with Asma. Asma, I hope you are taking the names down and screenshots so that we can provide these to the people who
Yes, Vinny
want
ji, I
them.
am actually. I
Thank
am, yeah.
you. Thank you so much. Thank you.
No
I really
problem, no problem.
appreciate you. Really appreciate you. So Real Page, it's amazing. Real Page is a company which is amazing company. A lot of research they do, lots of money they spend. So their predictions are here also. Forecasts for rent retention, renters retention, affordability, supply moderation, while these new units are expected to be delivered in this. How many? 500,000 units. New multifamily is going to come in the place. See, we are at a shortage right now. We have many, many millions of units short. But then because of COVID, it just dried out. Lots of developers went away. They canceled the permits and all that. So now it's taken 2 years. So it's 2025. So 2023, they started building back again. And that's why we see lots of products coming back, particularly in this slow pipeline, particularly in this and beyond. Economic headwinds are expected to slow the pipeline again, particularly in 2026. Market imbalance, rent growth will remain subdued in high supply areas like the Sun Belt and so on. Affordability gains, tenant retention is there looking ahead. Lots of great, great things. I think that's the last one. Let me look over here. Yeah, I'm going to come back to my PowerPoint if that's okay, and we'll be able to kind of take you through. Just thanks again to Asma. I think she was very kind to put some really, I missed it on my last presentation. I did it on senior living last week. And there it is. If anybody's interested to take your, education to the next level, this is all I teach. I teach all these things. I think it's right there, by the way. So if you're interested in passively investing in great assets of hotels, I've got a lot of great things coming in hotels, multifamily. I'm underwriting so many deals, senior living, all those things. Please scan me right there. If you can scan, and then, I don't know if this, maybe next time we could also write here, oh, this is to invest Okay, okay. Investor Club, you could join our club, by the way. If you scan, you could join. You'll get on our mailing list so that you could see what the new great opportunities are coming. So that's going to be fabulous. The next slide, if I may take you, is to teach you, free strategy call. If you just scan that one, you'll talk to me or Bill Seifert, my very good friend and partner, and we teach underwriting, we teach in the group coaching. I also do one-on-one also, but that's or just the academy, you could also do that. I think this is the one right there, the freebies. Please go ahead and take it down, and I'll do question answer after this one. So if you'd like, just for $1, just only $1, right side, scan and join the course, and you'll get so many different 27 lectures or 29. I don't remember how many are there. And you would really feel and see who I am and why I'm so passionate to teach so many people how to, build wealth in multifamily. So it's a small syndication mini course we have for $1. And then we have get access to Vinney's best-selling books and free. Remember, I mentioned to you, we'll give it to you for free at the, in the seminar at the end. So please scan this one. It's free benefits. Maybe we could write the link also. That will be, it's Vinney Chopra. If you could put that also in the chat, Asma, vinnychopra.com/free
Easy.
book.
I'll put that in here.
Please, thank you. Thank you. If we could do that. And then this is over here, guys. If anybody wants to really see, any of you want to even know about the hotels, then this is the Scan Me over here that takes you to the Eventbrite for the hotels. Then tax savings in oil and gas. I know President Trump just said yesterday or day before, drill, baby, drill and drill. Natural gases and all. So I'm putting a seminar on January 30th next week, 5 p.m. PST. Very good educational webinar, how to save on taxes and things like that. You could scan this one. And then this is investment. We have a great way to save on your W-2 income, tax advantages. That is on the February 6th. February 6th. So I hope you're able to. Let's go open it up to our, I was going to say, question answer. So let's open them up. Who have the first hands up? So let's, right there, we have 4 people who have hands up. Can we let one by one? Hi, Judy. Judy, I appreciate you putting your hand up. Thank you so much for joining. Please ask your question. Hello, Judy or Mel. I'll just give all 3 or 4 of you to talk, whoever is there. Sagarwal, I think, allowed to talk. I just said. So who would like to talk? Hello? Okay, maybe they're muted out. Okay, any questions? Right from the chat also, Asma? Okay,
Yeah,
Judy, go
Vinny, there
ahead.
is one
Judy?
question.
Yeah, please go ahead.
So there's one question that says, which areas do we want to buy in? The gray recession areas? It's by an anonymous attendee, so we don't have a name for that.
Oh, okay. See, I just went over the whole thing with you all. Maybe that question came a little while back. Remember,
Yeah, it came back then.
yeah, right. So hopefully I've answered that question in the PowerPoint as you saw, because there is a lot of great opportunities in each sub-market. I don't know where you are from. If you will chat again and let me know what state or city you are, I can give you much better answer. Okay. But it's not right away you could go into something very quickly. I know Vinney is there. Vinney, you're not even connected. I don't know what Vinney is asking here. Vinney, are you connected? Go ahead, Vinney.
Can you hear me?
Yeah, I can
Oh,
now. Please
perfect.
go ahead.
I wanted to see if you have any insights on the Los Angeles market. And when you were
Yeah.
showing the 4 different stages, right? It just said it was light green under recession. That's where Los Angeles was hovering. Um, does that mean that this is a good time to buy
No,
because
I'm
it's just
so
coming out
glad.
of recession?
I'm so glad you're saying that, Vinney. I would say I live near San Francisco in
Perfect.
Danville, Blackhawk, and I don't buy anything in California. Oh my gosh. What? Vinny, for
Wow.
20 years, I have made my billion or 1.3 billion portfolio in acquisitions, zero in California. Zero. I don't like the market. I don't like to, I mean, people are making money. That's great. But I would say, please try to go outside. I've been buying things remotely, just traveling 3 times a year and having teams of people. At the peak, I had 158 people in my team, managing my apartments and everything. My attorney is from Texas. He's been with me 18 years, Milton Coldgrove, you know. So, Vinay, I'm sorry, but if you have more depth knowledge into the market and where you want to buy, maybe in the inside Riverside Corona area, there might be some cheaper apartment buildings or something, but it's pretty tough to make money in multifamily, in Los Angeles, I will say. I know San Diego showed up. I just saw San Diego, but you got to go deeper and deeper. You can't just say, can I buy something? It depends on specific deal, specific area, what the motivation of the seller is, right? All this.
Right.
Huh?
Got it.
Thank you. Thank you
Thank
for
you.
asking the question. I appreciate that. Who else would like to ask the question? Okay, I think talking permitted. Judy, go ahead, please. Judy.
Are you referring to Judith Lawyer?
Okay,
You
yeah,
say,
yeah. You said
okay,
Judy
okay.
lawyer. Yeah, please go
Yes.
ahead. Yeah, yeah.
Well, as a matter of fact, the reason why I just searched for the Googled you earlier and decided to join, and
Yes,
I read Peter Harris's book, and I've
yes.
also did some research and was so disappointed, and I said, let me go on ahead and keep searching. So I found you.
Uh-huh.
And I am very excited about especially commercial real estate side of things.
Mhm.
So listen, I know nothing about this, so I'm just listening and learning. So,
Perfect.
but yeah, I am very interested.
Okay, thank you,
So
Judy.
would
I
love
would
your.
definitely tell everybody I have been buying single family homes all my life. But the thing is, they were not able to scale me up. I couldn't pay my kids' education. I could not build wealth. Since I
Mm-hmm.
got into multifamily, my net worth went 25 times,
Wow.
35 times, literally, because I learned the tricks how to get my friends, investors involved, where I was the general partner, they were the limited partners. That's what I teach in my course, also, by the way, multifamily syndication mini course. I hope a
Yes.
lot of you buy it for $1, just $1. It
Oh,
doesn't
okay.
cost you that much, less than a coffee or whatever. But you will learn 27 lectures. It will show you, open up your horizon, why multifamily is where you want to be. And then you can, I don't think we put it over here at all. My 997, that's the other one. If I don't know if we have that
I can
offer,
put the link over here, Vinny ji.
please, if you will,
Yeah,
Asma. But
I'll
that's
give
the
it to you.
one which is under $1,000. We spent so much money in so many other things. I used to, people will pay me 3,000 for that course. I want hundreds of thousands of people get that course. So we reduced the price to 997. You get 40 documents which you could use right away day one. You get all the pitches, all the PowerPoints to brokers and investors, and underwriting tool, which took me 10, 15 years to perfect it. You get the whole underwriting, everything. 179 lectures, I think, video lectures in the academy, and then 40 documents, which you don't even have to talk to me. And you will learn so much how to buy, who to talk to about multifamily. So Asma
Now,
is putting that in the chat, right,
I
Asma?
would like to ask you, uh,
Okay.
Is that $997 or $9.97?
Oh, it's 997, 997.
997,
Yes, ma'am.
997.
Yes. And
Yeah.
$1,000. And I promise you, if you're not happy with it, we'll refund your money within a month's time. So you will be so surprised. Lots of people just go through that all 172 lectures and the attachments, and they're able to scale up like crazy. Yeah. I'm not saying it because I want your money. I want to give you, good quality. Huh? Let's go to this one right there, Wall, right? Please go ahead. Oh, and ask to unmute. Okay. Please go ahead. I think we got 10 more minutes left. Seagral, Say Agarwal. S. Agarwal. Sorry. Go ahead. S. Agarwal. Ask to unmute. I just said ask to unmute. So please go ahead if you have a question. Hello. Okay, if anybody has a
Vinney, we
question
have
in the
some,
chat,
yeah, we have some more questions.
please go ahead.
So somebody has asked, what are some ways to find a good deal in multifamily?
Very good question. Very good question. I would say look at where you want to be. I always say that. Look for multifamily. See, multifamily means duplex, triplex, fourplex, tenplex. If you're brand new, I always say that taste the water first, but get fourplex or eightplex so that it's cheaper and you can afford and you can learn the tricks of the trade. Then go for 50 units and 100 units, and then go to 400 units like me. But I started with a duplex, by the way, duplex. Then I bought 14 units for $180,000. What? 14 units. Then I bought 109 units. Then I bought 50, 60. So I would say within 2 hours of where you live, you should do a search. What apartments are on sale by owner? Go on LoopNet. LoopNet is free, by the way. CoStar is, you have to pay a lot of money.
Oh, yeah.
But LoopNet.net, go there, put down your city and say apartments, just say apartments for sale. You'll come to all these 457 listings. Many of them are junk, by the way. But the thing is, you might get a rough diamond in the rough. The big thing I look at LoopNet is who are the brokers who are listing 10 unit, 5 unit, 20 unit. And I get their email address and find out their company. Then I start talking to them. So that's the thing. You have to build relationship with the broker and talk to them. Hey, I'm in a, I'm representing a group of investors. You could say that, or I'm buying for myself 4 units or 10 units in this market. Could you send me, is there anything in the pipeline? That's a good word, pipeline. Or are you working on something? I saw this listing on the LoopNet, but it doesn't make sense to me. I underwrote it. And you have to kind of look at the, their, what you call it, income and expenses and all that, put it on an Excel worksheet. See, I don't know if I could show that to you all. We have a little bit time. The underwriting, oh, you should have opened it. Let's go to, if I may, I think Academy. Is there? Oh, there it is, Academy. See, you guys get all these due diligence, everything, broker. We have all these big things in our thing. And underwriting, where are you, Vinney? Underwriting right there. I'll just open up my latest one, quick analysis. See, this is also you will get in that, my whole courses and all that. So you could put down the seller data. You just put down in the yellow things, rest everything is all calculated for you. And it shows all the way down how the things are from the seller data, your data, and your performa. In other words, when you do your business plan with this apartment and renovate or this or decrease the expenses or do the RUB system, extra incomes, that's what you learn very nicely, quickly. What's the cap rate of the, of the property? What's the debt coverage ratio? It will calculate everything for you. Cash on cash, that's the king. Cash and cash is the king. That's what you want to go after. And then investor returns. If you're doing manager keeps 30%, or you give to your equity partners 70% who give you the down payment and things like that. So that's a beautiful underwriting. Let me just go to the other one right there. The other one, which I'm very, very proud of, is this one. Oh, Winnie's Master. So maybe this is the one. It's my 8th version. Yeah, right there, version 8. So this is what you get also, not in the $1 course, but you get in the $9.97 course, by the way. Quick calculator, we put it here also for you. Then the rental units, you're able to add on all this information. And then this is the beauty of it right there. This worksheet has helped me to buy $15 million apartment complexes. How much? 50 million. So dollar worth, one apartment complex. But this also helped me to buy 14 units. It's mind-blowing what we have put together here. It's like right from the property information to incomes over here. This is the seller side right there. Then the expenses from the seller. And then we go all the way down on this side. But then we also go to the purchase conventional loan side, and then the total acquisition costs. Everything is in one page. I love it. I totally love it. And it's just so simple. There are so many complicated worksheets out there in the internet and all that. You can be so much bogged down with it. These are very daunting too, by the way. If you don't like numbers, this might really be very daunting, but that's where you put your numbers, which is our, yeah, right there per unit and our numbers, and it calculates everything. I kept on adding more and more and more. You just write it in the yellow, and then the assumptions. I designed the whole thing where you can do the assumptions, 5-year projections. All these worksheets are intertwined, that you get that 10-year projections. Because see, when people give you money, they've given me $220 million, by the way. Here a guy who came with $7 from India, is teaching, which I didn't know anything about it for 20 years back. And now I'm the master, written, the positivity book. I hope you get that. My other book, right there. And also the Spanish book, by the way. Spanish version, if some Spanish speaking people are there, it's on the Amazon also. And we could provide you the digital copy too. Then I wrote my fourth book right there, which is the senior living investing, which I'm really big on right now, and anyway. But let's go to the next one, 10-year unit
Usually we have
renovations. Please
we
go
have
ahead.
some questions. Yeah, we
Please,
have some
let's do
questions.
it. Uh-huh.
So somebody's asking that, do you have any creative financing advice besides seller financing?
Okay.
And
Mhm.
and then the other question is there a way to secure grants to create a senior living community? So these are the
Okay,
two questions
very
that we
good
have.
point. Sure. Thank you, Asma. Thank you for asking these questions. Let's go to the senior living community. Yes, different states have different programs for the affordable side of senior living. But you got to look into, building permits, building departments. They are the ones who govern all that, and how much rents you could charge per month from the seniors. So those are there. In my case, in the senior living, I've been building them from scratch in Florida, in Virginia, all those places. So we do private pay in my case, but that's nothing to worry. There are grants and other things. How to really buy the apartment complex, if it's not seller financing, is through bridge loans. But a lot of people got blooded in getting bridge loans last 3-4 years, by the way. They overpaid for the apartments and everything, and they got into trouble because the interest rates never came down. See, interest rate right now is 7% or something. The cap rates are like 5%. What do you mean? Oh my gosh. So how could you have a differential of 2% and be buying the property? So you have to really look into different ways. How, if the seller is not financing, local banks, local banks, That's what comes to my mind. Whenever you are looking at a multifamily property, do reach out to the local banks, talk to the commercial department, loan officer of the local bank. They would like to invest in the economy locally. So that's good one. FHA loans are very, very good ones also. FHA loans, my brother, Bo Eckstein, my partner on Friday's show, he's a great lender. If you come across any deal that you want to finance, just text to me. Just text to me and I'll put you in touch with Bo. And he has plethora of banks, local banks, databases. He's been doing it for over 30 years, and we could figure out a creative way to finance. The other part is I don't like that, but other way to do that is to raise money or promissory note with your family, friends, and all. If they're getting 4, 5%, or 2% in the bank, you might give them 8% loan, for example, right? So you could do a promissory note. I'm not teaching, I'm just teaching, but it's again educational and entertainment purposes only. I'm not saying to anybody you should apply these. Each individual situation varies, so you have to be careful. But I would say local banks and reaching out to me so that I could put you in touch with my ecosystem. The other thing which I just mentioned was raising the money, raising the money with family, friends, and many people will be happy to get 8% in the stock market over the years is what you get if you give them 10% or 8%, for short term. And then if the interest rates come down later on this year or next year, then you could refi and so forth like that. I hope that helps. Asma, any other call? Any
Yeah,
other
Vinny
question?
ji, if you could give the mic to Tasha Bell, she has a few questions.
Oh, sure, Tasha. Please go ahead, Tasha.
Hi, can
Please
you hear
go
me?
ahead. Uh-huh.
Yeah, Tasha, we can hear you.
Okay, awesome. Thank you so much, and thank you, Asma, for your help.
Sure.
I
No
heard
worries.
you mention, Vinny, that you have done some underwriting. Do you underwrite other investor purchases? And if
No.
so, you do not. Okay.
I do not. I have
Okay.
my own teams and everybody. We have so many deals coming. We are so tied up with everything. So, but we do provide this in my academy so that you could use it. And there are videos showing you everything, how to use it. It's not that hard. See, the thing is, if I may say that, Tasha, you want to learn how to underwrite rather than giving it to somebody. Unless you become a partner with some other person and you have stake in it because you don't want to mess up with the numbers. I say that, if you're relying on
Absolutely.
third party. So I hope you got my gist. Right, right. Thank you. Thank you. Who else has a question? Oh, we are almost over time, 11:03. If there is any other question, please let me know. Please do, if you don't mind, I will make another attempt to see if you would like to get this course, get access to Winnie's multifamily syndication mini course, and for only $1. This way, I'll know that you are interested in knowing more and you are not just tiptoeing just to see, hey, where is the free stuff? Always, right? Free stuff is there, internet, you could do that. But to take you to the next level, you will really need that. You will definitely need a mentor, a coach, not myself, but you could do anybody who you like. Please have a coach so that they can take you through. I remember when I paid $30,000 20 years back, and that was a lot of money, by the way, a lot of money. My family said, no, 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 don't pay. And, I took a loan actually to buy, but look at that. Now I'm making millions each year, earnings, millions. The key thing is you got to invest a little bit to reach to the next level in education. So thanks
Yeah.
again. If there is any more,
Vinny ji, there's one more question before we
please.
go, if we have time. So could you
Uh-huh.
please give the mic to Parth Shah? I don't know if I'm
Oh,
saying your
sure,
name right.
Perch. Okay, Perch. Let's see. Perch, where are you? Oh,
Parth
Parth Shaw,
Shah.
you said?
Parth
Yeah.
Shah, yeah, yeah.
Yeah, yeah, yeah. Could you also give access or no? Parth Shah. There,
I
how to
cannot.
talk. Okay, please go ahead, Parth. Yeah.
Hey, hi, Vinney.
Hi.
Sorry, I was a little bit late, so I missed your initial key content. But
Yes.
just little bit a brief of mine. I have tried a bunch of things in Ontario, from a duplex to a fourplex to a 16 unit,
Uh-huh.
and literally tired here in Ontario. So
Uh-huh.
I'm looking for a 50 units and up kind of a thing.
Yes.
And I'm also one of the co-founder of one of the tokenization company. They are bringing the fundraising part for the investors really easy in Canada. So we are
Uh-huh.
backed up by Nvidia and Y Combinator, one of the world's biggest names.
Hmm.
So we want to collaborate with you guys who all are in the investing world in the fundraising part, how
Uh-huh.
we can use the cryptocurrencies tokenization technology to raise the funds for your projects like multifamily projects and those kind of projects, making it
Excellent.
really easy for the people, right?
But
So
text me if you don't mind. Text me. Maybe I could have you on my podcast. Again, I have to put disclaimers that we never really endorse anything, but
sure.
I would love to have you kind of share. I know tokenization has been going back and forth, and that may be a good topic. Maybe that.
Yeah, actually, we have got almost very close to getting the exempt market dealer license from the Security Commission,
Oh,
and
very
we are
good.
at the very
Good.
close to the getting the fully functional in Canada, and we'll be the first in Canada to do that.
Oh, in Canada, not in USA. Is that
No,
right?
we have already there is already a company in USA, but there
Okay.
is no one in Canada who is doing it. So
Okay.
we are going to be the first one to bring that technology in
Oh,
the
love
Canadian
it.
market,
Love
especially
it.
for the real estate investors who want to raise funds for the multifamilies.
Oh, wonderful, wonderful. Thank you so much. I appreciate that. And please, reach out to me or Asma, and
Sure.
we'll love to have you on, or maybe on a show, which is live show on Friday. We do it Friday, 9 a.m. with
Okay.
my partner, Bo. Let's see on the right side. I hope you guys are able to. I want to thank everybody for taking the time on your busy schedule. And next month I won't be doing it, but the month after I'll be doing again webinar. I do 4 webinars. I do senior living webinar. I do multifamily. Hotels is tomorrow. Hotel wealth building is tomorrow, 10 a.m. And then I do gas and oil tax benefits, W-2 income that you could save directly with the gas and oil and all that stuff. So please, if you will, if you want $1 course, I just saw that again. It's right there. Asma was able to put it.
Yeah,
Please
guys. So
go.
if you need the link to $1 course or even the $997 course, I have put both in the chat, and I'm going
Oh,
to
okay.
put them here
So
once
one
again.
dollar, I
Before.
just put it there. Can you put the 997 also again,
Sure,
Asma?
sure,
Right there. I
sure.
just put it again. It's way up there. I just couldn't see it. Oh, there it is, right there. So I just copied it and put it there also. So guys, thank you so much, and we look forward to taking you to the next journey. I really believe that if you really are sincere, then go ahead and join $1 or $997. You will not repent. You will not repent. Thanks again. God bless you. See you in the next webinar. Take care. Bye bye.
Thank
Bye
you,
bye.
everyone, and you'll receive your copies of your webinar and your emails within
Yes.
1 or 2 hours from now.
Thank you so much.
Promise I
Thank
will.
you,
Thank you.
Asma. Appreciate you. Bye bye. Bye bye.